traders, welcome to IC Markets. You are watching weekly market overview by IC Markets. Let's start. The US dollar was the best performer last week. All six major currencies without exception have lost ground versus the US currency, and the moves were very significant. The Australian dollar lost 2.9%, the yen lost 2.4%, the franc fell by 2.3%. The British pound and the euro fell by 1.3% and 1% respectively. Slightly better was the dynamics of the Canadian dollar, which lost only 0.4%. The dollar index rose by 1.3%. As we predicted last week, one of the major moves in the foreign exchange market was shown by the Australian dollar, declining against the dollar below the key support 1.0150 after a rate cut by the central bank. The Reserve Bank of Australia cut its key overnight interest rate from 3% to 2.75% amid expectations of a well-anchored inflation and moderate economic growth. The pair is being traded below parity, and from the technical point of view, the starting movement can now proceed up to 0.97. The second largest move last week was done by the dollar yen, which was finally able to overcome the psychological three-digit mark and reached its highest level since October 2010, 102.14. Thus, it completed the formation of trend continuation patterns called triangle, as we expected in the previous overview. We are looking forward to the continuation of the growth of the pair to the target of the graphical model at 104, with the possibility of recovering position on a declined support at 100. The pound and the euro also quite lived up to our expectations. Both currencies have met resistance at a Fibonacci level of 50% and then dropped by two figures. The euro-dollar is now just above the support of 1.2950. As we already noted in the previous review, the possibility of retesting of the 2013 low at 1.2746 will significantly increase in case of closing below 1.2950. The British pound is being traded near 3-week lows below 1.54. Sell signals are emerging. Close below support at 1.52 could be a confirmation of the initiative transition to the bears. From the point of view of macro statistics, during this week the release of the April data on consumer prices in Germany on Tuesday, in the Eurozone and the United States on Thursday, and Canada Friday should be noted above all. Here the market expects that the figures will remain at the same levels or fall below previous values. In addition, the figures will be published on the GDP for the first quarter of Germany and the Eurozone on Wednesday and Japan Thursday. And here we are expecting more optimistic data than in the last quarter of 2012. Indicators of the market sentiment calculated on the basis of the Commodity Futures Trading Commission show that by the end of last week a significant change in the speculative positioning occurred only on the Australian and Canadian currencies. In general, the positioning points in favor of the US dollar. The Australian dollar is the only currency that holds net long position, but its size and rate of change cause concern. In the nearest future, confirming a sell signal may appear. The biggest net short position has begun, followed by the pound, the euro, and the Canadian dollar. We keep on giving preference to short positions on these currencies. It was a weekly market overview by IC Markets. Don't forget to subscribe to our YouTube channel and follow us every Tuesday. Bye!